we've had an avalanche of company reports drop today. So for our stock of the day segment, I thought we'd do a quick fire look at three of the heavy hitters out today. Car sales, JB Hi-Fi and BlueScope this morning. So let's check in on the numbers. Car sales trimming its final dividend to 22.5 cents a share, despite double-digit bump in full-year profits. Stronger revenue driven by its overseas assets has been tempered by a modest growth here at home.
Look, they're probably one of our better techs, and they've been around a while. I consider them out of the three old techs, which is real estate, car sales, and SIP. And all three are very good, well managed, and they're doing the smart things. The macro is working for car sales. So car sales is doing well. I don't think there's any surprises. It's priced for pretty good, doing quite well. I think it grinds higher. It just keeps doing well till the macro turns against you. And at this point in cycle, you don't have to be a genius to realise car.
Would you be buying it at this level?
Look, I started to buy tech at this point, and these guys, I think they're priced for protection to a certain extent. I don't see a huge side for it. But if you're a long-term holder and you've been there, I won't be selling out.
Okay. Gaurav, what do you think of the car sales result?
It was predictably good. I don't think it was a surprise that it was a strong result. The conditions could not be better for car sales. And that was a big surprise in itself. But the question really is, can it do better from here? Is this as good as it gets? The valuation is extremely rich. We don't own it any longer. We've already sold car sales. And I think that remains my position for the moment. I think this is as good as it gets. It's a wonderful business, but it is looking very expensive. I don't think it did any better than we thought it would, or anyone thought it would. It was a predictably good result, and probably a bit rich in terms of price.
Okay. All right. Is it as good as it gets with JB Hi-Fi as well? Profit skyrocketed more than 65% to over $500 million, allowing the retailer to return a full-year dividend of $2.87. That's up 50% on this time last year. Online sales during COVID lockdowns drove the sales up over 90% here in Australia, while the cost of doing business fell at the same time. Gaurav, is it the same thing with JB Hi-Fi, as good as it gets?
I would have said it last year as well, and here we are with a 50% higher profit. What an astonishing result. What an astonishing business. This might be the result of the season for me. $500 million in net profit out of JB Hi-Fi. Who would have thought that even 3 or 4 years ago? I'm genuinely stunned by the outcome. It's on a very cheap multiple. This is not expensive at all. But what that's telling you is that the market is not inferring these current sales and margins into the future. So there's a level of look through in this result, and I think that's probably the right way to look at it. Looking down the track 2 or 3 years, it's hard to see these kind of revenues and margins being sustained, but the business has a habit of surprising and just performing really well as good businesses do. So I would hold this. I don't think we can buy it really with these tailwinds so strongly behind it.
Yeah.
But wonderful performance and a nice hold.
Yeah, Mathan.
Oh, look, they're the Chemist Warehouse of electronic sales. They, pump you with more stuff than you can want to buy. But look, Gaurav's right. They've done a phenomenal job, but they've had a phenomenal wind behind them. You had the property market, you had the handout, you had the people taking money out of super and spending and work from home. All of these things have boosted numbers. That's why the market is telling you. I mean, it's a bit like miners. They always look the cheapest at the peak of their cycle, and retail's the same. It's a cyclical stock. So I mean, look, I think JB Hi-Fi is a great business. I think they've done really, really well. But I think everything that can go right has gone right. And we thought, okay, it's peaked last year around this time, and it's pretty much gone up and down. So in context, yes, they're making more money because there's been more handouts, but the market's telling you that's happening.
Okay, so you'd be a hold as well?
Yeah, look, if you're holding it, you've got it in cheaper price, why not? I don't think they'll do it until they get it wrong.
Mathan, what about BlueScope Steel? Says it's expecting another year of bumper earnings after its strongest ever profit as a standalone business. now expecting full year earnings between 1.8 and 2 billion US. The company rewarding shareholders with a 25-cent final dividend, topped up with a 19-cent a share special dividend. BlueScope says it will launch a $500 million on-market buyback to offer shareholders some additional cash. Mathan, blimey, if this first week of full earning season, we have had so much increase in dividends and buybacks, shareholders are going to be awash with cash.
Yeah, well, it is. I mean, you have to remember, when you reduce the debt to this level, and a lot of these cyclical stocks have done phenomenally well, they are sitting in cash and they're handing it out like confetti. So you're going to get that, and the market knows that. I don't think anyone's going to be surprised. I mean, BlueScope, look, it's a turnaround story that half the market completely didn't want to look at, and the other half of the market loved it. We had the run up. Hell, we even jumped on Sims Metal. Even the dogs were running. That's how good the thematic was. So the steel market's been on fire. Even with Chinese trying to control it, it's still doing quite well. The construction cycle is getting handout after handout. So the steel sector looks really solid, and BlueScope's doing as well as it's ever done. So it's hard to go against it, but we did get off all the mining stocks and this commodity exposures a month and a half ago. So in that context, we saw there's a bit of a top coming, and that's probably playing out now. You probably will see some weakness coming into the steel sector with what's happening on overall growth, but look, these guys have done phenomenally well.
Yeah. Gaurav?
Yeah, there are so many lessons out of this result, David. Most people think of BlueScope as a really lousy quality business, and I guess for a lot of its history it has been, but it's changed stripes quite a bit. It's got a very good American business, and it's been able to take advantage of the fattest steel margins over the last 15 years or so. And steel is a famously cyclical business. I don't think that's going to persist, and this is a good opportunity to sell the stock. But don't forget BlueScope. This is a high-quality cyclical business, much better than a lot of its steel-producing peers, and it's one to keep an eye on in the downturn. This is something that you should pick up every time the headlines scream about how terrible the steel sector is, how it's never going to be profitable again. That'll be the time to buy BlueScope.
Okay.
But sell.
All right.